On a recap of today's market action, Asian shares rallied following news that U.S. President Donald Trump would delay a hike on Chinese tariffs as a gesture of goodwill. And for more on this story, we're joined by Nick Marro. He's lead of global trade at the Economist Intelligence Unit. Nick, is this a truce, a real truce, maybe even the beginning of the end of the trade war? Is that too much to hope for?
Well, we at the Economist Intelligence Unit think that might be a little bit too optimistic. We don't think it's either a truce or a beginning of the end, so to speak. I mean, remember that we still have tariffs of 25% across roughly $360 billion worth of bilateral trade flows. And a new round of tariffs just went into effect a couple of weeks ago. We have more tariffs planned in December, so we can't really see we're seeing the light at the end of the tunnel all that yet.
So, Nick, what are we seeing with these two gestures then? Does the upcoming anniversary of the PRC, or perhaps even the U.S. 2020 presidential elections, play into these decisions?
Yeah, I definitely think those are factors. The 70th anniversary is very important for China, and so if the tariffs came into effect on October 1st, it would have been very politically uncomfortable for them. And I think the U.S. recognized that. I do believe it was a genuinely goodwill measure, especially because trade talks are scheduled to resume in October. And if we saw that tariff hike go ahead on October 1st, that would have derailed a lot of the positive momentum that could have fed into that next round of negotiations. At the same time, I think 2020 is still definitely a consideration for President Trump as well. And that's because the recent tariff hikes have actually made the trade war much more personal for the average U.S. household. Before, I mean, we saw the trade war concentrated in what we call intermediate components that allowed businesses to kind of diffuse the impact in the supply chain. The tariffs are now at such a high level that they're not really able to do that anymore. And the tariffs that just went into effect in September and that are planned in December are targeting finished consumer goods like clothing, toys, furniture, electronics. And so I think as the trade war gets more personal for the average U.S. voter, it's going to weigh on the political calculations of Donald Trump. And so there might be more instances of an excuse to kind of delay or maybe fudge a little bit in terms of where tariff policy might go. I mean, that said, there's still a significant risk that all of this could move forward full speed ahead. And so we're not really out of the woods yet.
So, Nick, some analysts saw China's tariff exemption, the one on 16 categories of U.S. goods, as aimed more perhaps to support the Chinese economy, less of a gesture of sincerity perhaps towards the U.S. Are both sides making equal concessions here as they seem to dial things down?
I think that analytical point is pretty spot on. If you look at what happened with the U.S., for example, over the past month, we've seen some warning signs flashing in the U.S. economy. I mean, the yield on 10-year treasuries has inverted. The PMI in August went into contraction. The jobs report in August wasn't as good as expectations. And so I think the U.S. looked at it more as a domestic factor, this idea that maybe we should hold back a little bit to give some space for our own economic performance. For China, I think it was much of the same. I think what was notable is that we didn't see any exemption in terms of the major big ticket items that are at the forefront of the dispute, namely soybeans and pork. And that's really for three reasons. I mean, the first reason is that African swine fever in China has decimated Chinese hog supply. And so the organic demand for soybeans, which really feeds into pig meal, that's no longer as robust anymore. And if it is there, China's turning to Brazil and Argentina, who are positioning themselves as enough to offset the shortfall from U.S. imports. The second being that even with disruptions to pig supply in China from African swine fever, imports only account for about 3% of Chinese consumption. And if China is looking to shore up more imports to offset this, it would likely, move towards imports from Germany, Canada, Spain, Brazil. These are already countries that already meet or exceed the U.S. in terms of the imports that are coming through. But finally, and most importantly, the reason I think that we haven't seen movement on U.S. soy or U.S. pork products is that China knows that these are the main priorities for the U.S. trade team. And before negotiations resume in October, I think it wants to maintain some of that leverage to make sure that they're still in a good negotiating position as both teams reconvene.
All right, Nick, thank you very much for that, those perspectives there. Nick Marro, their lead of global trade at the Economist Intelligence Unit.